Beside candlesticks, another essential tool that should be combined alongside others is volume. Many traders neglect this element, which is a mistake because they ignore valuable information they can get out of it. Volume represents the activity of traders. It tells us how much money were passed from one hand to another. On the daily chart, for example, volume shows us the overall money that was traded during that day, and the same applies to any other time frame. Usually there is more volume during strong trends, as more and more people are eager to buy when the price soars and get into selling panic when the price is sharply dropping. During a range, traders are usually more patient as they don't experience dramatic capital changes. Keep in mind that the terms high or low volume are not absolute values. We usually compare current activity to that of the past 2 to 4 weeks. As a general rule, think of high volume as at least 20% more than the average of the last month, and think of low volume as at least 20% below it. The key to remember is that volume gives strength for an indication. The higher the volume, the more valid the signal is. If we look at a candlestick chart, for example, and see a bullish engulfing candle after this line, this is nice, but it's not sufficient to signal a possible change. However, when it comes with high volume, it increases the chance that the reverse signal is relevant. Another example is trends, which we will talk about in the next lecture. If prices rise to new highs and at the same time the volume increases, then the upward movement is more likely to proceed. If on the other hand the price keeps going up but the volume is getting lower, then it is a sign that the trend is weakened and likely to stop or even reverse soon. And similar principle applies to any other indicator. The amount of volume adds a strength factor to different indicative signals. Volume is such an important tool that some indicators were developed based on its values. The most known, and the one I want to show you now, is on-balance volume, or OBV. The OBV measures the volume in addition to the most important ingredient of the analysis, which is the actual price change. First, it measures whether the price went higher or lower over a chosen period of time. Then, it adds or subtracts the amount of volume to the indicator's value according to the direction of the change. Let me explain what I mean. If, for example, the price was rising with a volume of $20,000 and the recent OBV value was $100,000, then it will add the $20,000 to the current value and the new OBV will become $120,000. If on the other hand the price was going down with the same volume, then the new OBV value would have been $80,000, because in that case we subtract the $20,000 from the current figure. So basically when the price goes up, the OBV will also go up, and when the price goes down, it will go down as well. But it calculates also the amount of volume included in every candle, so it will not rise or fall in the same degree. An up movement followed by high volume have more significance than one with low volume, so the OBV will increase more in such case. The same apply in the opposite scenario, and the OBV would rise only a bit if the volume is low, and it doesn't matter how high the price went. Adding the OBV to a chart is very easy. You simply go to Indicators, type OBV and choose it. When OBV reaches a new high, it tells us that the current momentum is likely to go on and prices are expected to rise even higher. Same apply on the downside. Let's have an example. Here we can see a little new low and then this candle. After that we can see this red candle with high volume, and the OBV reaches a new lower and more significant low, opening the way for some more decreases and another new low. Here, even though there was an attempt for the price to rise higher, it came with low volume and couldn't reach higher than this area around the recent significant low. Same happens here. The price continued down with this high volume red candle and new low and then tried to rebound. But it was again with low volume, while the OBV couldn't go higher than this line. So what happens next is further sharp declines and new OBV lows. Another interesting use we can make is to find trading signals whenever the OBV diverges from prices. If, for example, the price goes up, drop a little bit and then climbs higher, while the OBV goes up as well but it doesn't make a new higher top, then we know that the up movement is not strong enough and might reverse. And this is exactly what we can see here. The price increased, but as you can see, Instead of a higher high, the OBV went to a lower high, and then the price indeed reversed and returned to its downtrend. So now you know what is volume and how important it is. We also covered the OBV indicator, which is a very useful tool as it tells us a lot about the intensity of activity and how likely movements are to proceed. So let's go forward.